Good morning, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're here this morning with Andrew Knox. Now, Andrew has been kind enough this morning to lend us his time and expertise regarding Red Sky Energy. Andrew is the managing director of Red Sky. Now, as always, Andrew's been kind enough to prep and will present a presentation for us, just updating us on Red Sky Energy, how it's tracking and how the projects are going before we lead into the usual Q&A. As always, there are a couple of questions that have been pre-submitted. I come up with a few. But ladies and gentlemen, if you would like me to ask Andrew any questions directly, please submit it through using the Q&A function on the Zoom, and I will ask away once Andrew's done the presentation. Andrew, thank you very much for your time this morning, and thank you very much for the presentation. The floor is all yours.
Right, thanks for that, Ryan. Good morning, everyone. Let me share my screen here. Everyone see that?
Yep.
Very good.
Beautiful. Thank you.
Usual disclaimer. Some of you will have, well, many of you will have heard quite a bit of this already, but just a bit of a recap. So this is a corporate snapshot of the company. Ticker code's ROG. About 5.4 billion shares out. Market cap about 33 million, and we've no debt. There's about 5,400 shareholders, and the top 20 hold about a third of the shares out on issue. We have a very small team, a very experienced, lean three-man board. Two joint company secretaries, Adrian and Pauline. Senior management comprises Sej Tulakema, who has a new ventures and development manager, as well as a geophysicist for subsurface, Dean Powell. And we also have additional two staff in South Australia. So a very small team, and our head office is in Melbourne. So this is our portfolio. Over there, you can see in West Africa, the new addition, Block 624 in Angola. And then we have the two pre-existing areas of interest, in Aminka and Kilinola, and I'll talk about all these assets as we go through. So just focusing in on Australia, in the great state of South Australia, at Inaminka in the Northern Cooper, we've got 6 contiguous licenses there, known as the Inaminka Dome. We've had production there since late 23. First full year of production was last year, about a bit over $3 million of revenue from that field last year. And we've recently drilled another well, Yarrow 1, or re-entered another well, Yarrow 1, in the north of the block of the Yarrow gas field. And that flowed nicely. I'll talk about that very shortly. And then also down the southeast in the Penola Trough in the Coonawarra, lovely part of the world. We're working hard on drilling a new well there and working over an existing well. I'll talk about that more in a second as well. So just focusing in on Inaminka, you can see the licenses there in the Northern Cooper in the mustard color there, and the cartoon to the right. You've got the Yarrow gas field there in the red, and then the Flax oil and gas field, and then we've got 3 exploration licenses further down to the southeast. We completed the flow line there late in 23, started production through a 4-inch line. It was 18 kilometers down to tied into Napawi to get into the South Australian Cooper Basin JV grid to get the gas down to Moomba. We signed a take-or-pay agreement with Origin at quite good gas prices, in excess of the capped $12 a gigajoule, that's for sure. And that's proceeding very smoothly. And that's take or pay for all our gas production. We also have further agreements with the South Australian Cooper Basin JV for the liquids content, LPGs and condensate, and they also go down the same line to Moomba and are processed and then down to Port Bonython for onward sale. As mentioned, we start our first revenues late in 23. The project to date to the end of December anyway was 3.3. It's closer to 4 currently. And most of it is the revenue does come from the gas sales, about 85%. That's been reasonably steady. So we recently drilled the Yarrow 1 well. This was delayed by about a year because we had an ullage issue getting the gas into the grid. It wasn't in our line, but it was further downstream, I guess you could say, in the South Australian Cooper Basin JB, where there just wasn't room in the line to get our gas to market. But I'm pleased to say that the well was successful, cleaned up nicely, and now that we're looking at studies, backup studies, and so forth, and working with other works in the area that Santos are doing to get that connected into the grid. We were hopeful this could have been done early this quarter, but it won't be happening till this quarter, so we won't see production till through the quarter Q3 2025. And that should double our revenue stream. We've also shot 3D. We were carried through this 3D program with Santos, again late in 23. And it was, after acquisition, it was obviously processed, but it has taken some time to interpret this seismic. We thought it would be done at the end of this quarter, but it won't be probably completed till the beginning of Q3 as well. There's our area of interest there of the Yarrow field in this seismic program in the yellow dotted line. And that will be used once we get this. This will be effectively used as the basis for our full field development with other wells to be drilled. Probably the very, very earliest, I'd say, late this year. It might not happen at the end of this year, but we're hopeful that that'll take place. Now focusing in on Killanoola, there's been a bit of excitement here as of late. Here we are. Here's again in the yellow there, in the top of the Penola Trough, PRL 13. We have that 100%. Not too far from the township of Penola, in the Coonawarra. We've got 2 existing wells in there. The DW1 well that's got a pump in it, which is not working, which needs to be worked over and changed out. And then we have the Southeast 1 well, which is cases suspended down the southeast of the block. Those are the only 2 existing wells on the license. We've been working on a new crude sale arrangement with another party for the sale of the crude, for the offtake, processing and offtake, and we're well advanced in that. Quite successful. They're very happy with that. We looked at a lot of ways to sell the crude, and we've landed on this. Again, the crude will be delivered by road tanker. And we've resolved the problems around the flow assurance utilizing heating. We did look at additives and so forth and blending, but we think we've solved it with heating. And we've been in discussions with a drilling company that, quite fortunately, is on another drilling campaign. Is coming right past the door, so the stars are aligning, which is good news. So we're working on that as well. The well we're looking to drill is known as the KN2 well. This cartoon, this schematic here to the right, you can see the outline of the drilling pad we're looking at just off the road there. And if you look in the top left of that, you'll see the existing pad for the DW1 well, which we're going to work over as well. Very, very close, about 300 meters apart. In that red line there, you can see there's a power line going reasonably close to the pad as well, which is good news. And it's right on the bitumen there, so it's easy access. So we're well advanced in the discussions here, in contracting and so forth on the drilling program, the landholder licenses, insurances, of course, and working with the government for the approvals. So we hope to be announcing something there very, very soon on this. So an aerial view of the work program. What we intend to do is obviously drill this new Killanoola 2 well. and also work over the DW1 workover. The SE1 well will be at a later date to be advised. So in terms of our Australian assets, at Killanoola, we're working very hard on getting the drilling program up and running. We hope that will happen imminently. We're securing all the approvals that are necessary from the various parties, agreements, the government, the drilling contractor. Hopefully we'll be announcing something there shortly. And then in Yarrow 3, we have had some downtime there over the last year. It's been pretty good this last quarter. There's an offtake agreement, take or pay for all our gas, and all the liquids are sold to Santos and Beach, South Australian Cooper Basin JV. So we're waiting to tie in the Yarrow 1 well, which should double our revenue stream in the next quarter, or in quarter 3, I should say, and that goes also for the seismic interpretation, which will be used for our full field development again in quarter 3. Then over to the southeast of Yarrow, we also have the Flax field. Flax was an existing field, produced about 180,000 barrels historically. It was shut in due to oil price collapse many years ago. But that's still, the infrastructure's all there pretty much. It's 6 existing vertical wells, and that's something else we'll be looking at in the future to tie in as well. Now, turning our attention to Angola, this is a new addition. We had historically looked at a lot of opportunities in Africa. We decided to focus on West Africa for about the last 3 years or so. And I'm pleased to say we've managed to secure a license known as 624 with a discovery on it called Sigonia, which has a cluster of other structures known as the Sigonia cluster. We're in there with 2 other JV partners, Sonangol, which is a state-owned oil company. They operate. And then we have they have half of 50%. We've got 35%, and then ACREP, another local Angolan oil and gas company upstream, hold the remaining 15%. There's a lot of opportunity in this license. As you can see there, it's just offshore Luanda, which is the capital of the country. The country itself has about 1.1 million barrels a day of production. There's a lot of opportunity to come in this as well in Angola. Just focusing in on Block 624, you can see in that top little schematic there, the Sigonia cluster. It's just offshore Luanda, about 12 kilometers offshore. In fact, if you stand on the shore, you can see our license quite easily. It's right there. It's in 12 kilometers. Also, the refinery is right there. The Luanda refinery is right there, 12 kilometers offshore, which is useful. We commissioned an independent experts review of the resources in the license, particularly in the Sigonia cluster. We came out with 5.1 million barrels net to us in the Sigonia field. And there's also on the other structures, Ibis, D2 and B2, another 11 million barrels potential there. And there is one existing well in the field at Sigonia, which has been cased and suspended. And I should also add that these are post-salt prospects, but there's also a lot of potential in the pre-salt. This just shows what we've got there, the in-place numbers, and our net contingent resources there of 5 million barrels in Sigonia, as well as the potential at the prospective resources in the other 3 structures. There also is more structuring here, but this is what the independent experts PetroAus have done so far. And we continue to look for other opportunities, predominantly in Angola, but also elsewhere, and we're working those hard. Thanks for your time, and I'm happy to take any questions.
Brilliant. Thank you very much for the presentation, Andrew. Incredibly detailed. So thank you for the update on that one. We'll just pivot to the Q&A now. And obviously I've got a couple of questions I'll just use to kick us off, and then we'll shift to the registrant one. So first one for me, Andrew, is how do you see the Yarrow 1 well impacting Red Sky's production profile and cash flow over the next kind of 12 months?
The one well in Yarrow that will double our revenue stream, which we're well pleased for. It's been delayed, unfortunately.
Okay.
It has impacted the cash flow in that regard. No bones about it. But we expect to have that up in the third quarter, and then with the assistance of the 3D and additional wells, hopefully another two or three wells, that'll significantly increase the production yet again.
All right. Well, thank you for the update there. Now, just on Yarrow 3, obviously it's been online for a while now. Can you give us more of an update on its current performance and how it's contributing to the cash flow and operational strategy?
Oh, dramatically. I mean, it is actually our only source of production this time. We have had some issues with downtime, particularly last year, in the latter half of the year, more so. But most of that's been resolved. We had a little bit in this quarter, but nothing like last year. So that's performing pretty steady.
Okay. All right. Well, thank you again for the update on that one. Now, just to change to a different project, obviously with Killanoola, what makes it so attractive given current market conditions?
Well, currently we've got this field 100%. It's oil. Despite what people think, it actually is a light crude. It's got about 34 to 36 API, but it's waxy. It's paraffinic. It means it's got a high pour point, and that's been problematic for us in terms of production and supplying it to parties. We think we looked at various ways to resolve this, various offtake arrangements. But now we've landed on the fact that we're going to heat the crude. More will be disclosed on that in the future or shortly, hopefully. So we've worked hard. We've landed on that. We focused on that. We've got working on the agreements at present, well advanced, I should say, and also we've got this opportunity to secure this rig. There's not exactly too many rigs that I can assure you that come through the Coonawarra. And there is one coming, so the stars have aligned in that regard. So really pleased and very, very keen to grab this opportunity to use this rig if we can. So we're working 26 hours a day to get that done. It's a bit focused on that as quickly and as soon as we can, because if not, rig in, that's for sure. With the limited work programs, you always try and share this with other parties, other operators if you can. But due to the fact that this rig is coming past the door, and we can avail ourselves of some sort of efficiencies there, we're going to look really hard. And also, it's in terms of timing, it's close. We're going to work hard to get that done.
Okay. Well, thank you very much for the update there. That sounds pretty positive. Just another couple from me. Can you just briefly elaborate on how Red Sky plans to fast-track development of the Kigona oil field in Angola, and what early production realistically could look like?
It's very exciting. We're actually waiting for final parliamentary rubber stamping of it, as it were. Once we get that done, then obviously we get the JVOA done with the operator and the CREP. And then we work on the work program, and we've already had preliminary discussions and so forth, what we're going to do there. The work program does go over a 4-year period, but there's no reason why we can't fast track that. There is an existing well already in the field. There's no reasons why we can't re-enter that well and get early production potentially. But this is all going to be subject to discussion with the JV partners, of course. And Sonangol, as the national oil company, as operator, they're well connected and get things done quite quickly. And also the fact that you've got the refinery so close too.
Yeah.
Only 12 kilometers away. It's easy to get your product to market. Vastly different from what we're experiencing at Killanoola, that's for sure.
Yeah. Yeah. And just regarding the red stamping, do you guys have any sort of timeline indication from the government for that one?
It's imminent. It's very soon. Yeah,
Brilliant.
yeah.
Brilliant.
I
I
would
really
I would,
appreciate that one.
I would surmise probably within the next month or so. That should be done.
All right, thank you for the update on that one, Andrew. One last one for me. Obviously, the back end of the presentation, you did mention, obviously, potentially looking at other opportunities. Can you just give us a bit of a criteria guide on what Red Sky actually looks for when they're evaluating new opportunities?
Basically, we look for developed assets. We're not exploring. There's
Yep.
plenty of opportunities to buy existing discoveries, I should say, or existing production. We're finding that there's plenty of opportunity, not so much in Australia, but certainly overseas. And we focused in on West Africa. We'll look at Southeast Asia as well. So we do look at a lot of constantly have watching brief on opportunities. And we are working 2 or 3 of those at the moment. As you can appreciate, with a small team, there's only so much time you can dedicate. One day that will change. But we are focusing. There's a couple of deals on at the moment that we are working on. So they're either initial discoveries that are in production or undeveloped discoveries, should I say. And we think there's a lot of opportunity for a niche player to come in and look at these smaller fields, which are maybe not so such a big impact on the balance sheets of majors, but certainly on ours.
Yeah, okay. Well, thank you for that guideline there. Now, I'm just going to shift here to the registered questions. Now, obviously, I have a lot of questions submitted by participants in relation to Keeler. I think the main one boils down to participant asks, Andrew, are you happy with the progress at Keeler? And then alternatively, what is the plan if it cannot be pumped? How much was the new pump and the workover? And ideally, who and how is that all being paid for?
I can't really elaborate on at this point. All will be revealed. It's in discussion. The fact that we've obviously got the rig coming by has helped dramatically, and the way we've structured we've actually simplified things in many respects in terms of how we're going to market this. We've also reduced the work program. We were looking at doing SE1 well as well initially, but we're not now. We've had delays in the revenue stream we thought we were going to get from Yarrow 1, as I mentioned, for a quarter. So that's curtailed things a little bit, and it has impacted what we're going to do as well. But we're not doing SE1 straight away. We're looking at potentially just doing that KN2 well, as I mentioned, and working over the DW1 well. So initial program is effectively been cut, I guess you could say, from potentially 3 down to 2.
Okay. All right. Well, thank you for the update on that one. Just got some other live submitted ones here. An individual asks, D1, DW1 and KN2 wells, what are the projected barrels per day to be pumped?
Well, we have to wait and see. We have to wait, I mean, DW1, we know it's there. We had problems with the pump. We bought the pump last year. We've just got it sitting there and stored, ready to go, just to be changed out. But we at KN2, we just have to drill it and see. We're in discussions as to what sort of completion we would use there, what sort of pump we're going to use. We're still working on that. So we're just not quite sure at this point. There's not a lot I can tell you more on that at present.
No, thank you for the guidelines of that, Andrew. We do understand where you're coming from there. Another one here, an individual says, hi, Andrew. When can you realistically expect to see Inaminka being drilled, if you can provide any guidance or an update on that one?
On Inaminka, well, Yarrow 1's drilled. It's just not tied in to the grid. The flow line is not connected. And that Santos will be doing that in conjunction with other works that they've got in the area in the program that they've got, and that won't happen till this quarter. We were expecting it to be done this quarter, but it hasn't been. So we won't expect revenue from this well until the third quarter.
Okay. All right. Well, again, thank you for the update in that one. An individual asked if we had an agreement previously with Viva, then I'm assuming that there was already an understanding of how you were going to extract the oil. So why such a large delay when the first pump broke to now getting this up and running?
With there were constraints around that supply to Viva and what you had to do with the crude and the condition that you had to deliver it in. It wasn't a heating issue as such. It was the waxiness of the crude, as I alluded to earlier, and we were looking at blending it to overcome that, but that proved, well, also you had to get condensate or whatever to blend it with, and that proved problematic, expensive, and risky. And once we didn't have the supply, that put the kibosh on that, as it were. We were very, very close to that. So this is a much more efficient, simpler, and cost-effective way to do it. We've got now.
Okay, well, appreciate the clarification on that one. One last one for us today. An individual asked, the existing well in Angola, if that was back up and running, I presume at previous levels, do you have any inclination of how many barrels that could produce per day?
No, I can't.
Okay.
No, we have to, again, we have to do a extended production test
Yeah.
then, which is what we would do. We've had discussions amongst ourselves as to how we would do that, how we would affect that, how long that would take. But exactly what the flow rate would be, we don't know at this point.
No, understandable.
We're optimistic, but not. But of course, but can't really say what we think that's going to produce.
No, understandable. Andrew, thank you very much for your time and expertise this morning. Really appreciate you presenting information and then answering all those questions. I know some of them were probably tougher than potentially anticipated. But before we wrap things up, is there anything you'd like to leave us with today?
No, just we are working hard to get Killanoola up. There's activity on all the assets, some more than others, but everything's activity in tandem across the board, and we are actively looking at some other opportunities as well for growth. So watch the space.
Really excited to hear, Andrew. Thank you very much for your time and expertise this morning today. Appreciate it, ladies and gentlemen. Thank you very much as well. This one has been recorded and will be placed up on our YouTube channel as always. So feel free to watch it again. Appreciate your time. Enjoy the rest of your day. Cheers.
Thank you. Thanks for attending.